You are listening to ChartingWealth.com for Tuesday, the 14th of July, 2015. What is going on with the market? We always start with IYY. It is a total market index fund, so it tracks the total market. If you are looking at our charts or just listening, I will be more than happy for those listening to explain what we're seeing on the visual chart. Please always remember you can go to ChartingWealth.com anytime to actually see what's going on. But what we have had happening since about the 23rd or so of June, starting on the 25th candle that we have, you can see, and again we're charting the 2-day candles is the way we always start on all of our charts. Those are our big charts that we use. We've had the market moving down, down, down until around the 9th, and then starting on the candle for the 13th, actually back at the end of this last week on the 10th, you saw the market turn over and start moving up. Why? Well, Greece is supposedly getting its act together, but there's a lot of other things going on in the marketplace. But what we are seeing right now is a green upward moving candle, quite a wick on the top of that, almost the same size as the candle itself. That means that the bulls were able to push the candle up substantially, and the bears were able to pull it down, so it did not stay nearly as high over the 2-day period as it otherwise would have been, showing that there's been some brakes put on the total market. We have seen the derivative oscillator lose some of its downward momentum, and we can see the MACD coming together. It is not crossed yet. We're still in a confirmed down move on the large chart, but we do see a converging of the signal line and the MACD, although we do not have, that is, we do not have a crossover. We do have a breach in the 2-day trend line. We have a strong green upward candle, but that is where we left it for the 2-day chart. Now let's drop back and see what's going on. We can see the derivative oscillator crossing over sometime around on the 7th of July, and the derivative oscillators continue to gain steam. We had the MACD crossover on the 9th, actually moving up, but again, that is the small chart. The small chart has had a significant reduction. You can see in the Bollinger Bands, they have come together. Those are volatility bands. So a lot of the volatility has decreased substantially after some significant down moves on the prior days, and then sort of a side tracking from around the 1st of July till around the 9th, and then this up movement. So we have a strong up movement on the 4-day chart, but we can look, and the chart for the way that it ended on the 13th, the beginning of the week, it moved up in the morning, and then it started over about halfway down the candle when it moved up in the afternoon and finished at about the same high that it had in the morning. What does that mean to us? Well, it means that we didn't have continued pushing up throughout the day to higher and higher highs over and above what was struck in the morning. So we'll just continue to pay attention to that. That doesn't necessarily mean a great deal, but we have pushed through, as happened on Friday, pushed through the 2-day trend line. So we'll continue to pay attention. We have a bit of a dichotomy here. We have a strong up movement on the 4-hour chart, but still no crossing on the 2-day chart. And that is where we ended the day on the total market. Now let's switch back over to the 2-day chart, and let's look at IYY, which is the Standard & Poor's 500. We also see, as similarly occurred with the IYY, the total market, the S&P, which of course represents 500 large stocks. We've seen somewhat the same kind of movement moving down, and then over the last 2 days, that is the 10th and the 13th, we have seen upwards movement, and again breaking through the 2-day trend line on this 2-day candle. And if we drop back to the 4-hour chart, we can again see sort of the topping off that occurred in the morning and in the afternoon. We had a crossover going up on the 9th, and that has continued to push up strongly on the 4-hour chart. But again, if we look at the 2-day chart, we can see that we have not yet crossed. We have a coming together, but we don't have a crossing yet on the signal line and the MACD, and the derivative oscillator is losing speed, as we talked about yesterday. If, of course, you had a position, hopefully you have sold off some, if not all of that. If you had a position in a down move, you may be looking toward getting in a position on an up move, but we still don't have a confirmed up move yet because the 2-day chart has not crossed. So continue to pay close attention to the charts. Now let's look at QQQ, which is, of course, what? That is the NASDAQ 100 technology. Again, strong movement up. There is a huge up movement on the green wick, about the same size as the green candle for the last 2 days, which means, of course, as we said with IYY, the bulls pushed the market way up and the bears were able to bring it down to about half the original up movement. We don't have a crossing yet of the MACD and the signal line. We do have a reduction, of course, in the size of the derivative oscillator, so we are still in a confirmed down move. However, there's a lot of upward pressure on the Qs, particularly after Greece has been dealing with its problems. But don't forget now, we still have China in lots of trouble, and we have some things on our own back door with a weakening economy, with the word out from the IMF and the word out from the OECD. Those things don't necessarily bode well. If you don't know what I'm talking about, please go back and listen to our weekly review and forecast where we cover what was going on in the news last week and the problems with the market. Will this be a short up move, sort of like we saw with the Fed back between the 19th and the 23rd? Well, we'll have to see. It also moved up but never crossed over on the MACD and then turned right around and moved down again. So let's just pay attention and see what we see. If we drop back to the 4-hour chart, we of course see the 4-hour chart climbing steadily on the Qs. It crossed over back on the 10th on the 2-day trend line and is reaching the top of the Bollinger Band. So need to pay close attention to that. Also, the MACD and the derivative oscillator crossed at about this same, well, at the same time, which is important as far as looking how strong the moves are. Whenever we see the derivative oscillator and the MACD paralleling each other, that gives us a more favorable view of the up move. Now, again, not enough strength yet on the 4-hour chart to turn around the 2-day chart. So we do have a confirmed, we have continued down moves on the Qs, the SPY, the Standard & Poor's 500, and the total market. Could be changing, but we don't have confirmation yet of that occurring. And lastly, let's look at gold. Gold was technically down about 0.5% today. Gold, of course, is in a confirmed down move. It crossed over going down on the 2-day candles between the 19th and the 23rd and has continued to move down steadily and was down, of course, today. If we drop back, and again, it's below the 2-day trend line that we have drawn, connecting 3 candles. And if we look at the 4-hour chart, the half-day chart, what do we see? Well, it is below that also. So gold is very much in a confirmed down move, as opposed to a bit of schizophrenia between the 4-hour and the 2-day charts on our 3 indexes. That's where we ended the markets on Monday as we get ready to go into Tuesday the 14th. Hope that you find this helpful. Please join us every day listening to the stock chart reviews that we provide you here at chartingwealth.com. Follow us on Facebook and Twitter. We love your comments. We love to hear back from you. And please make sure that you sign up for our newsletter at chartingwealth.com. And from chartingwealth.com, we wish you the best in your trading and your investing.